prices rising as well. Joining me now, tonight's market masters, John Browne, Euro-Pacific Capital Senior Market Strategist, former member of the British Parliament, Josh Feynman, the Global Chief Economist, Managing Director of Deutsche Bank Advisors. Good to have you both here. Let me start, if I may.
Good to be with you, Doug.
Good to have you here. Let me start with you, John. This market today, we're watching a lot of reaction to Europe. We're watching reaction to Asian markets on the part of Wall Street. Is this trend going to continue?
Oh, I think so. One of the two great dangers facing the Anglo-American world is that a debt crisis will morph into a currency collapse. That's the biggest danger. And the other, of course, socially important, is the vast transfer of wealth in both the United States and the United Kingdom and in Europe from the private individual to the state and from west to east. And those have big social implications.
And Josh, your thoughts? What is going on here?
Well, a couple things. One is I do fear that some of the Europeans and possibly some of the United States may get bit by the austerity bug a little too quickly. Right. We have long-term budget problems. We have to deal with them, but they don't lend themselves to a short-term solution. And if we tighten too quickly on the fiscal side, we could undermine the fledgling recovery. The economy is still struggling here, and monetary policy doesn't have a whole lot of ammunition left to deal with it.
No QE3 would be effective in your judgment?
I don't think so.
And what do you think, John? Europe, obviously under an austerity program.
Well, sort of. They talk of it, but I mean, I agree with Josh in many ways, except that I think the fact is we need a correction, and the longer it's put off, the more severe it's going to be. With 70% of the American economy coming from consumption, every time they pump in another trillion, it's feeding consumption. And that's what we've got to gear back on, and we should be building production. And what I see as QE2 was a problem is it pushed the problem into the distance and has made it much worse. And that's why I think you're going to have a debt crisis forming into a currency collapse. And that's the real danger facing the world, is a collapse of the present currency system set up in 1944 in Bretton Woods by the Anglo-Americans.
Do you agree with that, Josh? Are you that concerned?
I'm not that concerned. I mean, I think, as I said, we have to deal with these problems, these budget problems, but not right away. I don't think we're on the brink of a currency collapse. The U.S. government is not having any trouble borrowing.
Are you kicking that can down the road, Josh, here?
We can't kick it down the road forever, but the problem is if you try to tackle it too soon, you could really undercut the recovery, and that would be worse.
And this is the conundrum of the Republic.
Just the recovery isn't a consumer recovery. It's the fact that government keeps pumping money into the economy. That's not a genuine recovery. It's statistical recovery. There's no recovery coming from consumers. That is the big problem. They're frightened. They're hoarding cash, and they're hoarding gold and silver, which is very bad for the future.
If you undermine, I mean, if you tighten fiscal policy, if you tighten monetary policy here, you would undermine even what little recovery that John's talking about that the consumer has. So I don't think that's the right road you want to go down.
And I think you've just described the conundrum for Republicans on Capitol Hill and for, frankly, all of the fiscal and monetary policy makers.
True.
Thanks very much, Josh. Appreciate it. John Browne, as always, great to see you.
Good to be here.
Thank you very much. Great to see you.
Up next.